Welcome to the first gold videocast of 2015, and let's talk a little bit about what happened in 2014, and I'll give you my outlook for 2015. First of all, if you listen to all the market pundits talking about gold in 2014, all they're talking about is how the bears were wrong once again and gold was down in 2014. Well, it was basically unchanged. Maybe it was down slightly in terms of U.S. dollars. But if you remember how 2014 began, all of the big experts from the big brokerage houses like the Goldman Sachs and Societe Generale, they were all looking for a big drop in the price of gold, down to 1,000 or maybe lower. The fact that gold prices were mainly unchanged during 2014, despite the overwhelming amount of bearishness that we rang in the new year with, I would say that the bears on gold were much more wrong than the bulls. And in fact, if you measure the price of gold in any currency other than the dollar, gold had a huge year. Gold rose by 10% or more in many, many currencies throughout the world. So it's only from the perspective of a U.S. dollar buyer that the gold price was flat. But if you were living anywhere in Europe, if you were living in Canada, Australia, New Zealand, Scandinavia, South America, you saw a big increase in the price of gold. In fact, if you cashed in your local currency and purchased gold, you preserved a lot of your purchasing power. In fact, if you look at all the world's financial markets in 2014, gold beat just about every stock market on the planet. There were a few exceptions, but the vast majority of stock markets, including, I think, all of the markets on the European continent, underperformed the price of gold. So contrary to all the negativity and the skepticism that 2014 began with, it ended on a much better note. But more importantly, look at how 2015 has already begun. You have had a significant increase in the price of gold, more significant increase in the price of gold mining stocks. In fact, the first week of the new year is probably off to its best start in years, maybe ever, for the first week of the new year. Certainly, if you contrast gold stocks, which are up strongly, to the U.S. stock market, which is off to a horrible start. You've got falling stocks and rising gold stocks, despite incredible negative sentiment, again, beginning 2015 on gold, and bullish sentiment on the U.S. stock market and the U.S. dollar. The U.S. dollar has continued its rise, making the increase in gold that much more impressive, because gold prices are rising despite the fact that the dollar index is hitting new highs. And in fact, if you look at the chart of gold in other currencies, and again, I mentioned that gold has been rising throughout 2014 against the currencies like the euro or the Swiss franc, we have just had major breakouts. At the beginning of the year, there was some significant overhead resistance at 1,000 euros to the ounce as the price of gold, and 1,200 Swiss francs. These levels have now been broken out. Gold has smashed through 1,000 euros and 1,200 Swiss francs. These are the highest levels maybe in approximately 18 months, but I think they are very technically significant. And so I think the correction that we had in this ongoing bear market in gold is over in those currencies. In fact, gold has returned to a bull market in just about every currency on the planet, with the exception of the U.S. dollar. And I think a return to a bull market in dollars can't be far off. In fact, what has been driving all of the negative sentiment on gold has been all of the positive sentiment with respect to the U.S. economy and the U.S. dollar. And I think all of that sentiment is going to turn as the recovery fantasy fades. You know, the oil price has dropped significantly in the last several months. And of course, gold price is not. So that's another commodity against which gold is broken out, oil, because that's an important relationship. But you have a lot of people wondering whether or not a drop in the oil price is good or bad for the economy. But the more important question is, why are oil prices dropping so precipitously? I think it's a sign of things to come. Remember, this phony recovery that the Fed constructed, it built it on a foundation of quantitative easing and 0% interest rates. And if quantitative easing is over and the Fed is going to raise interest rates, then the foundation is gone, and the recovery that rested on top of it is going to collapse. The Fed, because of quantitative easing and 0% interest rates, stock prices went up, real estate prices went up, and the recovery was built on the wealth effect associated with rising asset prices and the extra leverage that rising asset prices permitted so that we can have more consumption and more speculation. But also, one of the unintended consequences of QE was that other prices went up, like oil prices. Well, as it turns out, oil prices are now the first to fall at the end of QE and at the hint of rate hikes, but they're not going to be the last. You're going to see falling stock prices, falling real estate prices, and the economy returning to recession. As the bloom comes off this recovery rose, as stock markets and the real estate market follow the oil market, and if you look at all the economic data that has come out since we got the GDP report on the third quarter, it has all been terrible. Below estimates, very weak. We're looking at a fourth quarter GDP at best in the low twos, but it might even come in below 2 in the ones. And if you see this rapid deceleration of the U.S. economy from 5% GDP to barely 2 or in the ones, there is no way the Fed is going to be raising interest rates. In fact, at that trajectory, we could be at a negative quarter, negative GDP by the first quarter of this year, which means, again, all this rate talk is off the table, and quantitative QE4 is going to be queuing up, and this is going to be a game changer for the dollar, and it's going to add fuel to this new bull in the gold market. And in fact, if you look at the exchange rate of the U.S. dollar against the euro, and everybody now is talking about dollar parity because the euro is now at a nine-year low against the dollar. You would think that the euro has been falling for 9 years. It hasn't. It's been trading sideways. And this is the 6th time in 9 years that the euro has been about 120 to the dollar. And every time it's gone down there, everybody has said it's going to go to parity. And every time it's rallied, right? 130, 135, 140, 150. So I think there's no difference here. I think the euro is oversold. I think too many people believe that QE in Europe is 100% certainty when it's not, and they think that rate hikes in the U.S. are 100% certainty when they're not. In fact, we're more likely, I think, to do QE4 than Europe is to do any kind of QE. And if they do it, if Europe does it, it'll be on a limited scale, whereas if we do it in America, it will be on an unprecedented, massive scale. So I think the sentiment situation, the markets, the technicals are really poised for a very, very big year up in the precious metal, in gold and silver for 2015, and nobody is expecting this. We had the sentiment completely in the opposite direction. All the bears were piled onto the same side of the boat, and now it turns out that they got it wrong, and I think they're going to have to scramble to get to the other side as this illusion rapidly fades. And again, I've said this many times, that I've never seen a bigger disconnect in the markets, the stock markets, the currency markets, the precious metals markets, between reality and perception. What everybody believes is wrong. And soon, these widely held beliefs are going to be questioned in a major way and then abandoned, just like they were with the housing market and subprime when that bubble burst, and just like they were in the dot-com market when that bubble burst, except this is a much bigger bubble, and the damage and the fallout in the financial markets will be much greater when this bursts, and therefore it's that much more important that investors be properly prepared. And part of that preparation is owning gold and silver.